Hello, everyone. This is Dan Veru from Palisade Capital with a quick post-election update and an update on the financial markets. As expected, the election produced a change in the leadership in the House of Representatives, but by an extremely narrow margin for Republicans. This was priced into the stock market, as was the Democrats retaining the Senate, also by a very, very narrow margin, though there was a net pickup. So what does this mean for financial markets? It doesn't really change anything because much of this was priced in, but the likelihood that there's going to be another big spending bill by the administration is quite low because it won't be supported by the Republicans. I think some of the things that might get done in the new Congress will be relatively small and on the margin, but will not really change the financial landscape at all. The other big news from last week is the release of the Consumer Price Index, or CPI, which came out last Thursday. The numbers came in a little bit less robust than the previous numbers, meaning that hopefully we're at the early stages of inflation finally starting to come down a bit. This is very, very important because it could influence how the Federal Reserve raises interest rates in the future, the magnitude, and how far up they actually go. This is what they were trying to do. They're trying to get inflation under control in a big way. I don't want to make too much of it at this stage because it's only one report. The Federal Reserve is going to continue to raise interest rates because they're not going to rely or make a pivot to stopping the rate increases until they have far more evidence than just one report. I think the landscape and the table is set for a continued upward move into the end of the year for stocks. Interest rates have also started to come down a bit as well. Both of those are quite helpful for sentiment as we exit the year. So I think everything's in place for a year-end Santa Claus rally. We'll see how much that produces. Earnings season is over. Well, the Federal Reserve will have one more meeting before the end of the year where they will likely raise interest rates. It's difficult to know at this time how much they're going to raise interest rates by, but I think it's likely that the rate of increase of interest rates is going to begin to slow, and that's extremely important and supportive for financial markets and for stocks to go higher and for bond yields to finally begin to come lower. I'll have another report before year end with an outlook on how I see things for the coming year. Thank you very much for listening.
The information contained in this webcast reflects the views of Palisade Capital Management, LLC, as of the date of its original broadcast, and such views are subject to change without notice at any time. All information provided in this webcast is for informational purposes only and should not be considered investment advice or recommendation to purchase or sell any specific security. While the information presented herein, including information obtained from third parties, is believed to be reliable, no warranty is made concerning the accuracy of such information. There can be no guarantee that any forecast discussed in this webcast will be realized. Consult your financial advisor before making any financial planning or investment decisions. Past performance is not a guarantee of future results.